Okay, I'm a little excited to get into this tonight. Welcome to the Hurley Investments Market View Commentary for Monday, the 25th of 2019. We've got 13 of us here tonight. Two favorites popped in really quickly. Gotcha, I hear you. And I made some silly comment. It's actually I can and gotcha were the first two. I make a silly comment and then 6 more people can hear me all of a sudden. But now my favorites know who you are, which is all of you. With that said, 2 main points I want to bring up tonight are what are experts using to trade? And what if my results are not matching the S&P 500? So it was funny because the questions kind of came in that order through my week last week. And let's go to experts really quickly. The experts have no better legal information than you or I now due to the internet. In the past, they would have insider information via telephone. Hey, X amount of shares are being sold by Warren Buffett. X amount of shares are being sold by UBS. Dark pools were actually just call-in orders that would move markets as then brokers or money, what do they call them? Not money managers. They call them market makers would then call up, UBS and say, hey, Bank of America is selling 3 million shares. Do you want 1 million of them at this price? Hey, Morgan Stanley, Lehman Brothers is selling 5 billion shares of Apple. Does someone want them at this price? Then we had the internet and we had spreads where the spreads narrowed because you could do things instantaneously. And we also, with the internet, had the news speeded up. The news was no longer at night. It was now minute by minute. So some of the advantages that are legal by experts are now gone. Well, Kevin, what about someone that sees dark pools? Well, with all due respect to the stock whisperer, if you're seeing what's being traded at dark pool, that is illegal. You should not and cannot see that. That's why it is a dark pool. It's where bigger institutions can get rid of their shares without having proprietary treatment on their shares versus shares in the market. The speed in the market has made a dark pool an area where large quantities can be sold after they've been approved by the SEC for sale. Warren Buffett just can't go sell off a block 10 million shares of Apple. When it gets to be a block, it needs SEC approval. That's why he owns tens of millions, if not hundreds of millions of shares of Apple. He's in it for the long haul. If you know or you work in an organization and you hear from the 5th floor when you work on the 3rd floor that there might be a big sale of Bank of America, that is illegal. So right now, experts have no better legal information than you do. What does that mean? That means, in all honesty, you have to work as hard as they do, and that's why it is impossible to trade for a hobby. And then the hard question was asked of me. Oh yeah, well, what do you do, Kevin? What are you doing that's all this work? And it's simple stuff. It really is simple stuff. I basically have everything I have from last week. And I'm going to walk you through how on Sunday I spend 3 to 4 hours of my day. It's on this simple form, but I do it and use it through a, pretty sure it's an at-a-glance planner. Let me pull it up. So I've got an at-a-glance planner for $17. I have one of those yellow pads of paper that you can get from anywhere. And I'm constantly taking notes that I can review and use. But really, it's pretty simple. It's pretty simple, and here it goes. I do all my work to figure out where markets are going to end this week. My work this week has told me lower. On Sunday, I take a look at every single chart for the indexes, and I use something that's for free. I use, what is this pop-up window coming up? That's ridiculous. So I'm sure you guys can hear that. What is that from?
Everything you buy needs money back for the things you really want.
Well, I guess part of it is you have to listen to some stupid ads. So I fill my chart 6 months out in time, candlesticks, landscape, price labels, color vision impaired. I take a peek. And I'm going to use pivot points. And I like the Williams percent R. What the heck is going on? Man, I can't believe where I'm getting this from. Or I'm getting this stupid thing from somewhere. So here we go. I pull up my charts. And I know they're going to change for Monday with you, but history has taught me you're not going to outguess the market. Plain and simple, low tides sink all ships. I'm going to our 3 biggest indexes. The Dow Jones Industrial Average, which I know is only 30 positions. It is what it is. And I like the NASDAQ composite. And I can't wait to get off of here because I obviously don't have the pop-up windows blocked the way I should. Every time you go through a reset on your computer, it does that. So, I'm taking a look at the markets. And literally, I don't necessarily prep them on this page, but I'm taking a look and saying, okay, it's not what I wanted. That's not the right day. Come on, for crying out loud. I just cut all 3 of them, so let's see what my problem is. Please don't make me go back. Well, I missed one. Dow Jones. I think maybe I missed the S&P 500. Yep, because I didn't say I wanted to save it. I'm sorry, guys. Let me go through and pick it up again. It doesn't matter, though, where you pick up your information from. I like charts because it's free. You can pay if you don't want those annoying ads, and I may do that here because they bug the tar out of me. But you're just looking for basic information that, in all honesty, you can probably get through your broker. Because I do classes, I'm using the Williams percent, excuse me, I'm using blah, 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 blah. Stock charts because they're free. Everyone can see them, and it's easy for me to cut and paste. There are many different charts you can use. If I was to find a second one, I would most likely go to FinViz. And the reason where I probably go to FinViz for more individual stocks is because their charting already sometimes has the chart patterns drawn in if you're in pennants and so forth. 50-day, 200-day, 20-day. It's funny because the 50 and the 200 are what big money would use, but little information. When I'm looking more at individual stocks, I most likely will pull the FinViz chart. So, what am I looking at? I'm trying to make it simple. I am trying to take a quick peek at the 3 indexes and say, hey, what am I looking at? What do I see? Technically, we will now have a bearish crossover on the 5 and the 20. As I looked at this, I thought, hey, we're going bearish, but we just got our golden cross. Kevin, what is a golden cross? Good question. If you don't know what it is, go research it. Golden cross trading indicator. The golden cross is a technical chart pattern indicating potential for a major rally. The golden cross appears on a chart when a stock's short-term moving averages cross above its long-term moving average. The golden cross can be contrasted with a death cross indicating bearish movement. Do some research. I wish I had on here. If you do your averages, your expectation is between like a 5 and an 8.5% growth, or a 5 to 8.5% upward potential movement on your your index or on your stock. So I took a peek, and I'm just going to stick this up here as some information. I saw our golden cross, but our markets are bearish, so we have indecision, right? That is why I throw pivot points in here, which I didn't do on the Dow here. But if I look at the S&P, technically we're still bullish. So now we have a short-term index or a less diversified index against a broader index. And the S&P is still bullish. Not only that, but we have our 200-day sitting right at 27.55. We have a pivot point sitting at 27.59. So we've got some support down here where it probably won't fall below that. It might, but it probably won't fall below that. And then as you look at your NASDAQ, technically we're still bullish there as well. Well, Kevin, aren't we crossing on the MACD? Maybe, but we haven't crossed. It's on top of each other. We're still above our RS line on the RSI chart. If we put a 5 and a 20, we'd still be bullish there as well. Haven't crossed yet. So I'm getting contradictory information. Hey, Dow is heading bearish. S&P is bullish still. NASDAQ is bullish. Probably have some support to the downside. Glad to see it wasn't too bad today. Dow's down over 100 points. It was up over 150 points. NASDAQ was up as much as 22, 23 at one point, down as much as 60. So as I looked at on Sunday, I also take a quick little peek. And as I look at my charts, I've got to find out what could be happening. What's happening in our markets? And this is really pretty easy. I gather most of this information from briefing.com. And I write it in my planner. So I'm keeping track of what's happening and why. Calendar's economic calendar. I want a full listing. And I literally write these down in my planner. It's simple. It's easy. Nothing to worry about. Housing starts and building permits. FHA housing, S&P Case-Shiller, consumer confidence. I write it all down. It's not hard to do. I should have taken a picture and snapped a picture of what it looks like. But the short answer is I literally write housing starts. And, we'll say housing starts. In fact, let's do it this way. All right, housing starts, and then I just draw a line. And in this one, the briefing consensus was 12:10. And then when the actual comes in tomorrow, all right, 12:22. And now I've got in one at-a-glance notebook all this information where I could go back March 26. We probably had housing starts on February 26. And let's see, new home sales. Where was housing starts? Housing starts. Might have been a week earlier. We might not have had it because of our government being shut down. So let's see what else I can find. S&P Case-Shiller Index, consumer confidence. It's supposed to be at 132, right? So if we came out with the consumer confidence number last time, consumer confidence came out February 26, as expected to be 25, came in at 131.4. Really beat ahead of time. Obviously, dang it, you can see there where it says prior. But I've got it all in a planner. Hence, on Sunday, I'm trying to prepare this, and I am literally putting all of that information right here. So I would be housing permits, housing starts, building permits. What else do we have? FH, FA, housing price index. We have consumer confidence. And off it goes. I'm also paying attention to what earnings we have in. So this I'll fill in later for you. You guys don't need to see me fill all this in. I'll fill it in and I'll post it tonight or tomorrow morning, depending on how quickly it gets okayed. But I also will make a quick run, and I'm already on here. So I then will go to earnings. Oh, you got to register. You got to log in. And so I put it all in, and all they want is your email address so they can send you crap. And it's pretty funny because today, the earnings of importance were Red Hat for me. Red Hat was important to me because I've got a client. Actual is 116. They beat. I've got a couple of clients that own Red Hat. They're waiting to get called out. I might also then take a peek and see how Red Hat reacted to their earnings. They're going to be bought out by Hewlett Packard, I believe. Oh, that is the chart. Wow. They should be bought out at a 190. Pretty flat as they're sitting here. Looking for some after market news. I will go to one of the apps that I have. I like the CNBC app for stock ownership. And if I scroll to Red Hat, Red Hat is unchanged in after hours. I wonder why it's unchanged if they beat earnings. Well, probably because they're going to be bought out. It's actually IBM, I think, is buying them out. Red Hat's going to be bought by IBM, and it should be at $170 a share. So, Red Hat would be put here. You can look at everything if you wanted to. You could bring up the whole day, although this looks like everything. That was the full listing. No, here's your full listing, and click on it for a full listing, and that's it. Winnebago and Red Hat. Those are the only two that I might put down that I'm willing to follow and spend the work on finding out, hey, how did they do? Literally, I'm just writing Red Hat on my planner, and up above, I'm going to say that they beat, and then they're flat, gets an equal sign. If they go up, I've got it written to an upside. If they go down, I write a little down arrow. So I know how my stocks reacted after hours or the next day on their earnings. Let's go back to this week. Let's take a look at the full listing on Tuesday. Well, I don't really trade Carnival, but Carnival has been getting more and more news. McCormick I might look at, but probably not. I'm going to look at KB Homes because I got people that like to be in the home area. So I'll follow KB Homes for tomorrow. The short answer is some of what they call important. Most of what I'm looking for is going to be here. On Wednesday, I'll also look at Lennar, and I would just write it in my planner. I've started paying attention to Five Below. Not only that, but we also have H.B. Fuller, another home builder. PVH is a rather big one. And literally, I just go back and forth, making it as simple as I can be. 28th full listings I can look at, but I'll take a look here. I'll look at Sportsman's Warehouse because I trade Under Armour. And because I don't like them, I would tell you they'd suck. Nothing else is of interest to me that I would follow. And then I would go to Friday, knowing it's the last trading day of the month. BlackBerry, I do like to see BlackBerry not do well. I do pay attention to CarMax because I have Ford. I wouldn't trade the FANG, which is a FANG ETF, but here we go. I just made an interesting comment there. Hey, Friday is the last trading day of the month. So as I'm trying to figure out, going through my information on where I think the markets are going to be, I'm taking into effect last day of the month for where the markets are going to end this week, last day of the month, and we're also going to deal with some tax selling. We might go break some moving averages as we do some rebalancing and tax selling for people at the end of this week. Last week, I started to put some protection on some shares, and I chose Apple to put some protection on because they had an announcement. Hey, these guys are going to get their own credit cards. You're going to do selling movies. Hey, we're good to go. Well, people didn't like it. Was Disney broke 110 and it broke through some moving averages. You can see the great big downward day. Next day, put some protection on. Got ready for that protection. I did not put protection on Under Armour. It's up. Under Armour is holding a pivot point and a level of support at 2060. I did not put protection on Visa. It is holding its, well, I guess on this one, it's a 20-day simple moving average, but it's still bullish. It also has a breakout. I did not protect Ford. It's just on the top of its range, holding 850, ready for a breakout higher. What did CVS? I did add some protection on, I believe. Ugly looking chart broke the short-term support. Baidu has some protection on. Came above, started to head back down, hit some resistance. Got protection on them like at 170. I can't remember some of the other things that I would trade, but I'm sitting here making the best judgments based on some charts and my research. I do think of where we're going to be in April. And I would say flat again. We're going to go through some selling for earnings. Our earnings season doesn't start till the end of April. Not going to have a whole lot that moves us. I take a look internationally. All stuff you guys could be doing. I used to go, and I had it really nicely worked out, where Barron's. It's not even there anymore. Dang it. Barron's had an international calendar that was so perfect. Now you can't find it, so I got to go to my other one. Thank you. I wonder if you just got to subscribe again. Wonder if I already have subscribed. Join now, $1 for 8 weeks. Yeah, I'm not looking at doing that. See what data they have. And then we used to have an international calendar right here. And it has since changed. A lot of interesting information, but the calendar is what I really was looking for. Commodities and futures highlights, bonds and markets highlights, mutual funds. Yep, I don't see it anymore. So my other one is TE, Trading Economics. And this is the same thing. It's just now listed in a longer list. Germany's business climate information, doesn't matter. ECB speech, it's just a speech, doesn't matter. Fed Harker has a speech. Not a whole lot there. Tuesday, Germany, France business confidence. France. Ooh, GDP, final quarters. I don't know if that's going to affect futures for us, for France. There's all of our stuff, housing starts, building permits. Wednesday, ECB, Mercer's speech. It's like a Fed chair speaking. Japan's foreign bonds, stock investment by foreigners. U.S.-China trade stocks. Hey, we're going to have trade talks. They're coming back over. Wednesday, I'm looking for news on U.S.-China trade talks. And it's kind of funny because this was not in here. This was not in here on Sunday. As we go through Great Britain, not much there. Spain, nothing to worry about. EA, consumer confidence. No, not really. Bunch of Great Britain. Nothing there, nothing of really any importance. Baker Hughes oil rig count. We'll hear that. But nothing much else comes up here. Nothing much that I would take a peek and go, hey, you worry about that. I do pay attention to the 30th and the 31st, just because sometimes they will have some information there that for example, China's non-manufacturing PMI, that will affect next Monday's futures, but not by a whole lot right now. What am I spending all my time doing? How do I get all this information? I do a lot of reading throughout the day, as I usually get up around 5:40 in the morning my time. Markets will open up at 7:30. But I will get up usually at 5:30, and if I'm looking for information, I'm usually going to always first look at CNBC. Come on. And I'm reading this off of a phone app. Really just looking for any information in regards to what's happening that I might have missed when I was asleep. I will take a look at Bloomberg as the second place I'll go to. And I'm just looking for news. But why am I here? I've got the remote one. I also will do I don't do CNN. I do Fox News, Fox Business News. One of the other places that I actually do spend a lot of time on, crying out loud. Need to work on my. I do spend a lot of time reading the articles on Seeking Alpha. I have a portfolio. I'm reading the articles and then I work their numbers. I work their numbers to find out if numbers are correct. I definitely would look at Facebook stalls pre-earnings, but still too cheap. That is something I would go through and I would read to work how I could get a price to earnings ratio of 188.99. And I check these guys, this person's numbers. I work through their numbers. I see if I see different numbers. I'll do a forward PE, a 2, 3, 5-year forward PE. I'll do my research to verify that he has any clue what he's talking about. And in all honesty, half of the time, these jokers don't know a thing. They throw in a bunch of charts and their interpretation mathematically doesn't add up. Doesn't add up in the least little bit. I do have www.finance.google. I also do have a portfolio or a watch list, but I usually don't see it. Boy, I had an update that this is a little bit different for me. I'll view my full watch list. And I'm also back to some of the articles that they may have in here that I'm just reading. I'm just trying to do all the research I can to do one simple thing, and that is to make my best educated decision on when and how to protect stock ownership so I can add more shares and or lower cost basis until my stock takes off like a rocket. Which is my simple answer to the second question. I'm not worried too much about matching the S&P 500 because I know mathematically I'm going to beat it over a period of time. I'm going to beat it when we have a recession. I'm going to beat it when Apple has these big drops that it's having. Now, as a money manager, I'll be honest with you. The more money I have, the easier my job becomes. 1,000 shares is ideal. 1,000 shares, if we have a 10% drop, I should be able to add 10% more shares for you. If we only have 400 shares, I need a 25% drop. 300 shares, I need a 30% drop. But sometimes I'm okay with being in some smaller share counts, like a Baidu, that has an upside potential of 288, trading at 166. I don't always just add 100 shares when the money becomes available. I do try to find bottoms. I might hold on to cash for a while to get into more shares, maybe more at a bottom. I may hold on to shares for a while looking for some leap positions to go on at a much cheaper price so I can possibly book a profit and use that money and or get some explosive growth off of a potential bottom. All I'm trying to do is make up something on the way down, because when things come back up, I will be in a much better position overall than the S&P 500 will, and that's how I beat the market. Does that mean, like last year, I will have no positions come back? No Apples or Baidus or Disneys or Visas or Fords or Under Armour? Of course it does. But I'm looking a little bit longer term. And again, if I could ask people this question, I haven't asked you much questions, I've just been talking at you, I do apologize. Does anyone here feel that we're going to have a recessionary risk in the near future? I'm just asking about a recessionary. Does anyone feel we do run the risk of a recessionary future, a possible recession? It's funny, I've got two really quick yeses, and I've got 1, 2, 3, 4, 5, 6, 7 maybes or not sures. Okay, I agree with you. Trump might be able to push us all the way out past 2020 for the election. So let me ask another question. The next time we have a market crash that is roughly 6 years overdue, will it be a quick 20% or could it be really bad? I just had a thoughtful comment here. Someone just said, it is possible the Fed doesn't interfere, which they will. They most likely will. But the second question is, how do you feel about our next market crash? Do you feel it'll match 2008? Be best, better, worse, or not so bad? The same, worse, or better? Wow, one person just put in worse. There are 13 of you. Think about it. Our next market crash, will it be worse, the same, or better than 2008? What a bunch of wishy-washy people. Not sure, don't know, probably worse, maybe worse, probably worse. So we got 2 don't knows, 3 probably or maybe worse, and 1 standing worse. So let me ask a question then. Why do you think it may be worse? And here's an interesting comment that just came across. My crystal ball is cloudy right now. Maybe a black swan event with China and Russia. Agree 100%. Too much QE and fudging the economy equals worse. I agree 100%. Too much bloating the numbers for both corporations and GDP, it should be worse. Rick, if I could ask you a quick question there. It's not the numbers were in, well, said floated. I may have meant inflated. Yeah, our economic numbers were inflated with the stimulus and the QE. I'll agree 100%. In which case we put a Band-Aid on it. We're not necessarily fixing the problem. I do think we did fix some of the problem financially, but I think we opened up the door on some accounting issues that don't make the overall problem the way it needs to be, or completely fixed. We need organic growth. And when you change the GDP to do sales of transactions and potential values of artwork and that kind of stuff, that's not grassroots GDP. I think we do have some risk. And for me, it seems like the crashes have been getting worse. The crashes have been getting worse because I believe we are more tied to a world growth pattern, a world growth projections. I don't think we can just have an individual company standalone or country standalone is what I'm trying to say. I think China's gotten big enough and pockets of countries have gotten big enough that we can no longer stand alone and weather global impacts from the pigs or China's not doing so well. I think we're no longer to the size of being able to weather those storms and still ride above the general markets or the world markets. I think we're all in the same boat together now. So what I was trying to show you today is what I do. Also, through the week for my news, I have news that I see that could be helpful for us all to see. So I send it to myself via email. I open it up, I cut and paste the information in, and off I go to try to give you guys as much information that I have on Monday for where I see where the markets are going and why. I am making my best educated guess, but I'm also mostly in front of the markets all day long, watching a wild market like today, doing the best I can to find real reasons on what's happening, not listening to market news. And I do that so I can be, so if anyone was to give me a call, I've got an understanding of what I'm doing with their positions and why. I've got real numbers to back it up. I'm not always right, but I'm right enough that that I've done pretty well at beating most other money managers that are out there. Any questions about anything I've thrown your way tonight? Tomorrow I'm going to go through the long call positions and try to have a total a total, I don't know what I'm trying to tell you, a total picture of how well we've done this year and why. And I guess I will go from there. I don't see other questions coming in. Guys, have a wonderful evening. I appreciate your time with me tonight. I do hope this was helpful for those of you that asked those questions on what I'm doing, how I'm doing it, and why. And I also hope I've done a good job with you at helping you understand, plain and simply, what I see in the market and where I'm getting my information from, where I don't think even the big boys have any advantage over us. They just spend more of their time doing it. As long as they're spending more of their time doing it, we'll be in good shape. All right, no more questions came in. Guys, have a wonderful evening. I appreciate your time. Feel free to come tomorrow to the trade findings and adjustments. And until then, have a good evening. Bye-bye.